Interest rates charged by Maryland banks and savings and loans are published in the newspapers every week. New car loans now range from 13 to 13.5%. Home mortgage loans are more varied. Fixed-rate mortgages range from 12.5 to 14.75%. But financial experts predict these rates will come down.
I think we'll see it between 11 and 12% by early next year. Automobile loans, I think, will be coming down toward 12 fairly soon.
The prime interest rate, which hit its peak of 20.5% in 1981, dropped to 10.5% last year before climbing again. But Union Trust Senior Vice President Art Keeney thinks the current drop will continue.
Our best prognostication is the prime rate might get as low as 10.5%.
So house sales may be increased, as well as the sale of cars and other consumer goods, although lower interest rates don't assure that result. And some consumers will be hurt by lower rates.
Of course, we have different consumers. Some that want to borrow for purchases will be helped a lot. On the other hand, those who are primarily investors rather than consumers may find that their yields will be down.
At this point, I would probably go for a 6-month investment and lock in a rate as opposed to playing the short game.
But Dr. Layden, T. Rowe Price's chief economist, says the lower interest rates are necessary right now.
I think there's no question the lower interest rates help the economy. What has made this move necessary toward lower rates is the economy is fairly weak right now. But I think that this is the process that'll help the economy to pick up again fairly strongly next year.
Meanwhile, Union Trust Bank dropped its prime rate today down to 11.5%, and many other Maryland banks are expected to do the same. I'm Jack Bowden, News Scene 2.